Today I'm going to look at the cryptocurrency Polygon, symbol MATIC. I'm going to begin the brief analysis by looking at the monthly chart. I just want to point out to you that we closed July with a hammer candlestick pattern, which is a relatively rare candlestick, and it happened during a decline. So it usually symbolizes a change in trend, and you'll see that we did trade above the hammer high at 1.18 this month, and we're sitting at a 30.5% gain. Turning to the weekly chart, you'll see here one of the positive things for MATIC coming out of the July low was that it didn't have to deal with the 50-week simple moving average or any trend lines, because a lot of the cryptocurrencies were actually stuck below the 50-week simple moving average or actually previous highs, whether it be 2018, 17, or 2020 highs. Thus, it was more difficult for them to engineer rallies off the low. But that wasn't the case for MATIC. There was a much better price structure. On a daily basis, you can see here that we're holding the July ascending trend line after having a few failed attempts at trying to get above the 38.2% retracement of the May-July correction. It's also holding these highs here from June 23rd and June 24th, which come in around 125, 127. So this is actually a critical moment or a crossroads for MATIC in terms of this trend. Obviously, if we break below this level, it's not the end of it. A pullback to the 50-day simple moving average is a normal and a healthy development. But before I get to that, I just want to point out here on the 6-hour chart, you'll see that there was a bearish momentum divergence going into the retracement level. You had a rising wedge, the momentum divergence, and thus you had the resolution to the downside. And it's been contained by the July ascending trend line and the 56-hour simple moving average. Turning back to the daily chart here, really, like I said, if we do close below the June 23rd, 24th highs around 125 to 127, you should see a quick test of the 50-day simple moving average at 1.07. Normal healthy price action. A trade below that on a daily closing basis will interfere with the bullish narrative and likely project a test of the 200-day simple moving average at spot 82. So be aware of how important the 50-day simple moving average is. You'll see here that it was resistance and then it served as support. So what you want to see here is it, being formidable, credible support if we indeed do break down from this area of the ascending trend line. On the upside, the area between the 38.2% retracement and 50% retracement is going to be a little bit of a battle. You could say that the easier money has been made, and that now we're going to face a battle to get through these two levels that include this price congestion going back into late May. So the consolidative process or the pause could actually end up enduring for longer than people expect, and it could be more challenging to rally into the all-time highs, or at least this high established on May 26th of 248.